Tell me if this sounds familiar. You analyze the market for hours. You line up the perfect trade. Maybe it's a clean break of structure, maybe a textbook setup. Everything looks right. You enter. Price starts moving in your direction. You feel a rush of confidence. Finally, this one's going to work. You're in profit, a few pips up. You think, maybe this is it. You start visualizing the move playing out exactly as planned. Then out of nowhere, the market snaps back. A sharp move against your position. Your stop loss? Smashed. And within seconds, the price reverses again, going exactly where you thought it would. You sit there staring at the screen, thinking, why does this keep happening? That's not bad luck. That's liquidity inducement, and until you understand how it works, you'll keep being the target, not the sniper. I was just like most traders out there. I spent countless hours trying to master the basics: trend lines, RSI, support and resistance, chart patterns, the usual tools everyone teaches. I watched YouTube videos, read strategy PDFs, followed mentors who swore by these indicators, and for a while I believed I was getting somewhere. But no matter how carefully I analyzed, no matter how perfect the setup looked, I kept losing. I would enter a trade, it would move slightly in my direction, and then, boom, I'd get stopped out, over and over again. And what really messed with my head was what happened after that. Right after I got taken out, the price would suddenly reverse and go exactly where I expected it to go. I wasn't wrong about direction, I wasn't totally off on structure, but something was missing. That's when I started digging deeper. I stopped thinking like a retail trader and started asking, who's on the other side of my trade? And that question led me down the rabbit hole. I discovered the concept of liquidity inducement, and everything changed. For the first time, I saw how the market actually works behind the scenes, how big players create traps, how price is manipulated to fuel moves, and why most traders lose not because of bad analysis, but because they're being used as liquidity. Once I understood that, I stopped being the hunted and started thinking like a sniper. Let's break down one of the most common traps in trading: liquidity inducement around support and resistance zones. At first glance, everything looks simple. You see a clear resistance zone forming. Price is rejecting the same level multiple times. That's usually a signal for many retail traders to go short. At the same time, you might spot a support zone just beneath, where others are looking to buy or catch a breakout. But here's the catch. These zones don't just attract trades, they attract liquidity. When enough orders pile up, stop losses, pending buys and sells, the market is no longer neutral. It becomes a target for big players. What happens next is a liquidity grab, also called an inducement. Price spikes above the resistance zone, taking out stop losses and triggering breakout trades. It looks like a clean breakout at first, but it's a trap. Immediately after, price reverses hard, catching traders on the wrong side. Now we look for the opposing liquidity, in this case, below the support zone. Price repeats the same move, a fake out, a stop run, and then another sharp reversal. But it's not over yet. The market then targets the equal highs, areas where liquidity is engineered by retail expectations of double tops or strong resistance. Another inducement occurs, price sweeps that high, and then reverses again to collect what's left of the engineered liquidity below. This entire sequence shows you one thing: the market is not random. It's a liquidity game, and if you're not aware of inducements, you're not trading, you're being traded against. This was just a basic introduction to liquidity inducement, one of the most manipulated yet misunderstood parts of trading. In the next video, we're going to dive deeper into how these traps are engineered and how you can actually use them to time sniper entries with precision. So if you're serious about leveling up your market understanding, make sure to like, share, and subscribe so you don't miss what's coming next. I'll see you in the next one.